Most of us thought that after last year, 2020, this year would be a better year. But interestingly, the scenario setting is still not too good. Now, even after having been vaccinated, close to about 95% of our adult population have been fully vaccinated. It doesn't mean, and the opening of the borders does not mean that the worst is over. And I must say that challenging times are still there, not just for Malaysia, but the whole world at large. But having said all that, one of the good things is that with the gradual opening of the economy, we hope to see that everyone can get back to the kind of lifestyle we used to live. May not be the same, but at least something better than before with the kind of lockdowns that we were going through. Now, if you look at this whole budget, now it's this whole scenario, what I'm going to speak today, it's a combination of the budget, the 12th Malaysia plan, and a matter of time, we are going to come out with a reset policy, which is where I've been working on at the EAC, Economic Action Council at EPU. Now, if you just move to the following slide, if you look at the key thing here, what I would like to say is that the good thing is that these are the areas of topics that I would like to discuss today, and a little bit on the budget itself. And everything is relating to budget and also on the 12th Malaysia plan. I'm combining both into one and also looking at the forward looking of how we should position ourselves going forward. Now, if you go to the following slide, a very interesting thing here is that the first part is, I must say that from where we started this year in terms of the speed of vaccination and where we are now, I must say that we have impressively performed well. From less than 20% of being fully vaccinated at the start of the year, today I can say that 95% of our adults are fully vaccinated. And if you look at the total population, we are talking about 76%. And then we are looking at the age group of between 12 to 17, they're also about 77%. And this is a very remarkable number that we have achieved. And I can say that if I am correct, when you look at the age group between 12 to 17, single dose, we are the highest in the world. So that is how fast we have gone into vaccination. So one of the key things that we realize is that we cannot go on having the kind of lockdowns and restraining people from moving, closing businesses to shut off. And by shutting off all these corridors or the doors here, what will happen is that we will be able to contain the virus spread. I think we must accept the fact that this virus is going to be there forever. But the real challenge now that we are facing is that the booster jab. Okay, unfortunately, the take-up rate on the booster jab is quite bad. We've seen that 40% or so have not appeared for the booster jab here. Now, this is a bit of a tight situation. If this is the kind of trend that we are going to see going forward, then the number of cases could be picking up. So when the number of cases picks up, my underlying fear is that we may then have to probably roll back some of these policies. So this is where the new challenge that we are facing, and the health minister has also watched that out, because one of the things is that, yes, there's a level of complacency now that we have opened up. Therefore, why is it I must take booster jab? And some are saying that in the past, you only said we need to take one jab or two jabs. Now, why there's a need for booster jab? And then there are some arguing out that by taking the jabs, I felt sick and so on and so forth. But I really hope that everyone in this country actually eventually go for their booster jab. So with that in picture, then the progression of the economy as a whole, businesses, lifestyle, livelihood, everything will move back to its more comfortable level. So that is the first part here. I must say vaccination is progressing well, except for the booster jab now, where 40% have not come into the picture. And the next part is that as a result of the way population has been vaccinated, we have now moved towards from pandemic to endemic. This is something which is really, really necessary. But having said that, I must say that please accept the fact that COVID will always be there. It is just going to be like another endemic like influenza, dengue, or malaria. We have to live with this COVID scenario setting. So that means that we still have to maintain the kind of social distancing and so on and so forth. So which is a good sign. And also now we have opened the borders. We have started off with Singapore and eventually that we are already in talks with Australia. And these are some of the potential countries that we are planning to talk going forward. That is with South Korea, Japan, you can look at Hong Kong, China, New Zealand, and likewise all the way up to Indonesia and probably many other countries going forward. So the first setting here is that I'm saying that things are working positively for Malaysia. Vaccination is progressing well. We have moved from pandemic to endemic. We are opening up the borders, not just local borders, but also international borders. But the only setback at this point in time is the booster jab take-up rate is quite weak. That is almost 40% have not turned up. Now, as a result of these three scenario settings here, if we move to the following slide, what we can see is that today, I can say that the real numbers are showing manufacturing sentiments is actually improving. If you look at the Purchasing Managers Index, that's the first chart on the top, it's clearly showing that we have crossed the 50 threshold. The 50 threshold is what we always use to show whether it is anything above 50 is an expansion, anything below 50 is a contraction. Now we have already gone into the expansion mode. And what it's telling me is that forward-looking numbers are also good. Okay. And likewise, retail segment is picking up, wholesale segment is picking up. And when you did a quick survey out there, looking at the business prospect, if you look at earlier part of 2021, initially, we are talking about 56% of the survey participants were saying that they are looking at business condition to be worse. But now, first half next year outlook and the whole year of next year outlook, only 31% and 25% are saying that their business outlook is negative. There are more people have gone to the neutral segment, that is 52% and 53%. And given that this is the kind of scenario setting that we are seeing here, if this is the kind of perception that you business people are telling us, this is a good sign for us, okay? From the policy side, sitting as from the government side and from the banking side also. And what I would see is that if we continue to maintain our kind of booster, the vaccination, the opening of the economy, I would think that by next year, probably second half of next year, the 53% who are saying neutral view next year, the numbers will drop and probably more will start saying it is a better year next year. That means it's not going to be 22%, but it's going to be more than 22%. So that is the positive sign that we are seeing. Key reason being is that easing of the lockdown, reopening, the pandemic to endemic, and also the stimulus measures coming in the picture. Also, another factor that they have said is that the political situation is far more stable now compared to the earlier part of this year, right from last year itself. There was a lot of uncertainty on the political side. So that has also affected the business sentiment apart from the COVID situation. And if you go to the next slide, having said all these things, despite looking at a very positive sentiment, there are also some headwinds. One of the key things is also, it's always the challenges on the SOP. Because I must agree with all of you all, before you can ask me this question, the general feedback that I've been getting, and even the government has been getting, is that the SOP has been very complex, where we have essentials and non-essentials and dealing with about 7 to 8 different regulators. So it has become a strong challenge in running a business. So the fear now is that if we were to come back and introduce another round of a temporary lockdown, assuming, let's for discussion purpose, then what is the kind of SOP you're going to have? So the current government has realized the complexity of the SOP. So what the Prime Minister is trying to do is to have a more simplified SOP for everybody. One simple SOP for everyone, and thereafter for respective businesses, maybe we will try to customize, because we recognize that as long as we maintain the current trend of the SOPs, it is going to be very challenging. So that is the first issue. The second issue that I would like to highlight is that businesses have been very badly affected by the shortage of workers, foreign workers here. For instance, the plantation side, we are talking about an opportunity cost of about 12 billion. Rubber gloves is about 15 billion because of shortage of foreign workers. And then we have other industries like furniture, construction, manufacturing, and services. All of y'all are affected with the labor shortage issues. Now, this is something that we are also looking at very closely, and I hope that this is something that eventually there will be some form of relaxation that will take place. When that takes place, then potential outlook of businesses will start improving going forward. But as at now, with the current policy setting there on the foreign workers policy and so on, this shortage of workers will remain, and it is going to affect the business at least for a short period now. Now, resulting from the SOP and the shortage of workers and the restrictive movement, what has happened now is that what I notice is that export volume index and import volume index have actually dropped. So when I look at the trade numbers, when we look at very good trade numbers, overall trade numbers, export numbers, overall export numbers are good. That is basically because the prices are really good. Prices of CPO, which we have been benefiting, prices of crude oil that we have been benefiting. So it's more of a price factor that has been supporting quite a lot compared to the volume itself. And discussion with the port side, what we realize is that a lot of containers are not moving because of issue of shortage of workers, issue of SOP. So we hope these issues would be resolved very quickly, and therefore by 2022 things can start to move going forward here. And if you look at the following slide, now another concern is that now this is a global issue. And when we talk about this global issue is surging commodity prices, spike in producer price. It's not just for Malaysia, but it's all over the world. And what we are seeing today is that cost of doing business has moved up. Average out is between 50 to 70% increase. Now, only for cement, we are looking at about 21, 23% kind of level. Now, as a result of this, the underlying inflations are very high. You're talking about anything more than 15% here. Now, this is the challenge. Now, the real cost, the reason for this rise in this cost is largely because of the situation of the mismatch between the supply and demand, resulting from the restrictive measures that we, not just Malaysia, but globally, the restrictive measures, shortage of workers, and as a result of that, we are unable to meet the demand. So there's a lot of backlogs out there, supply shortages, raw material shortages, and this is all causing a spike in demand, shortage in supply, the mismatch. Now this trend this has forced the underlying prices to actually move up. The way I look at it is that this trend could actually continue at least until first half next year. So this is where we are in terms of the price pressures. And logically, I would not be surprised to see a bit of transfer pricing taking place into the consumer side. So already now you can see, even if you want to do a simple renovation for the house itself, the costs have gone up. Okay, compared to what was it before, and now you're talking about 30% up, 20, 30%, some are even 50% up here. So it's the rising cost of doing business. It's not just a Malaysian issue, but it's a global issue, a trend that is expected to take place at least up to first half of next year. Now, moving to the following slide, focusing on both the budget and also on the 12th Malaysia plan, and even if you're talking about the reset policy that's going to come out very soon, potentially what is going to drive this economy is still going to be the manufacturing sector. The top quadrant is the semiconductors, the chemical related, and rubber products. This segment is going to continue benefiting from the trade side. Global economy is expected to continue to grow. Next year, we're looking at about 4.9% kind of growth. And global trade is also expected to grow. So with this kind of positive growing trend, this is definitely going to benefit our external trade here. So business or manufacturing relating to export oriented, like anything relating to electrical and electronics, chemical and chemical related and rubber related products will continue to benefit. Now, more domestically, I expect to see construction and infrastructure to pick up next year. And that is largely because, there's a 75 billion gross development expenditure project allocated in this budget, where it is going to benefit the construction infra and also the trade side. So with the construction infra, I think about easily 141 billion worth of projects, mega projects will be coming out. The same projects that we have been talking about all this while, like the Penbonyo, LRT3 and ECRL. These are the rollover projects that is going to help out here. Now, with the pickup in the export side, manufacturing on the export side, when the construction and infrastructure side starts to pick up, I expect the consumer side to also start to improve, because we need to see the cranes move. Only when the cranes move, you can safely say that the multiplier coming from the construction infra to the real economy is going to be strong. I can roughly say that the multiplier from the construction side to the economy is about 1.5 times to 1.8 times. And resulting from this construction infrastructure activity, the multiplier to all other sectors of the economy is about 1 time. So you can just imagine how strong and powerful the construction infrastructure impact to the economy on the whole. So you're talking about 2.5 times to 2.8 times multiplier. So this is where the importance of construction is there, and I hope that under this budget 2022 12 Malaysia plan, and if you look at the stimulus measures, everywhere we are focusing on the construction infra side here, and that would then help on the consumer side, because with the opening up of the borders, opening up of the economy, I'm expecting pent-up demand to also pick up here. So net bigger support is going to come from the exports, and also equally big support is going to come from the domestic side, construction and the consumer side. Also, we hope that all the supply chain related businesses would start picking up, because as we all know, due to the SOP, there has been a lot of hiccups in terms of the supply chain related businesses. And we also expect the vertical integration upstream, downstream to take a bigger role here. And one important thing that you all have to take into consideration is the importance of what the RCEP and the CTPPA is. I think that we should be rectifying the whole thing of RCEP and CTPPA by end of this year. When that comes into the picture, then that is going to give a big booster for our whole economy as a whole. Now, the other area, if you move to the following slide, is on the industrial parks. So this is another part that we are actually focusing on. We are trying to look at cluster mapping. Now, this is another area that we want to focus on. And if you look at these key pointers here, is that Malaysia at the moment, we have more than 600 industrial estates. And many of them, what I realized, they have got very good infrastructure, connectivity, and etc. And if you go right down to the last point here, what we are trying to focus on now is to create industrial parks in the areas like aerospace, SMEs, halal industries, furniture parks, and so on. By having this kind of industrial park, you create a very good ecosystem. So this is a new wave that we are really pushing very, very hard, so that the supply chain is not affected very badly. So along all this line, one of the key things that we are focusing on is a lot on sustainability. You can't run away from sustainability in doing business going forward, because Sustainability is going to be the essence of everything going forward. We are already talking about wanting the banks to focus on green financing, not just AmBank, the banking system itself into green financing. We are talking to even in terms of capital raising, in terms of sustainability, green financing kind of things. So everything we are trying to look at is go green, because we are talking about zero commission emission by 2050. But we are also talking about focusing on the kind of green going forward here. So please have this in mind. Whatever business that you are in today, you should be looking at three things. One is digitalization. You cannot run away from this going forward. That process of digitalization, only you know best how much you can digitalize and how much you can't. Automation is the other thing you also have to focus on, because we want to move away from overly depending on foreign workers to be more automated driven kind of economy, businesses, and so on. And the third one is also we are focusing on sustainability, that is on ESG itself. So we want to have this kind of businesses and the industrial park here to have this kind of ecosystem here. And if you go to the following slide, the emphasis is also on where I would say the retail industry. Yes, we expect this segment to recover, but okay, the recovery I foresee is going to be a bit fragmented, largely because of the headwinds. That is one, on the future COVID cases, we don't know how is it going to be. Then the high household debt servicing issues that's coming in, and what happens if the recovery is slower than expected, Malaysia's growth. So I think these are the things. But whatever said, net retail segment is expected to remain positive. And the other part, logistics and transportation. Now we want to become the regional hub in terms of logistics here. So I expect this segment to actually pick up very fast going forward next year, be it in terms of land, cargo, and sea. So these are the key areas we think I foresee this segment to really pick up. The other segment is also on e-commerce. Now this has really gained very strong traction here. If you just look at the income numbers, January, September this year itself, you're talking about 23% year-on-year growth. And a lot of them are coming from B2B, business to business, and then business to consumers. But business to government at the moment is very weak. There's only about 6. That is why part of the what we call the reset policy is also to streamline the government activity, that is to digitalize the entire government activities. That is part of the proposal that we have also inked out in the reset policy. So with that, eventually we want to get the e-commerce play a very big role. And one key thing that I noticed in the e-commerce, there's a lot of contribution. Actually, e-commerce, it's giving to the economy coming from the manufacturing and services side. Nothing much on the agriculture. So that's an area that I will be talking about where you can also start looking at it. So please bear in mind that when we talk about going forward, the new norms of doing business all the way, it is all about digitalization, it is all about automation, and it's all about sustainability here. So when we talk about digitalization, it is part of it is also we are looking at e-commerce kind of thing. Tourism and tourism related, we expect this segment to start picking up, but it is quite unlikely for tourism and tourism related to come back to the old levels of 2019 as early. I don't think we can achieve anything until 2024 kind of level, 2024, 2025, because the noises of the COVID and the pandemic will remain even in 2023 until the dust really settles. So that would mean that more conservatively, I'm taking a more conservative view. So I would think that this segment of the industry, anything relating to tourism and tourism related, you will be coming back to 2019 level somewhere around 2024, 2025. And if you go to the following slide, now, e-wallet has gained a new normal. If you look at the volume of transaction in the first half of this year, is up by 89%, QR payments and online banking. So this is another mode of payment that we are focusing on, and we expect this trend to continue going forward. There's going to be more e-wallet kind of payments taking place than the traditional way here. And what I think, but the only challenge here is that this is a very highly competitive market. There are too many players, and Malaysia, what I see is that we have a very small population. So for one to survive in this kind of e-wallet, you must be very innovative. If you are in this e-wallet business, or what, if you're looking at it, you got to be very innovative, and your products and services must be very compelling. Because this is, you must remember, it's a very high investment and operational cost business. So what I foresee is that potentially, because there are too many players now, potentially there's going to be consolidation coming in. And also the way I look at it is that going forward in the e-wallet, the focus may be on the digital financial services, especially on micro investments and micro insurance, because I find that this area is a bit untapped. So the e-wallet is one part here. And then if those in the auto industry, yes, I expect this segment to really do well. Going forward next year, we are looking at about 570,000 to 600,000 new cars to be sold. This year, we're looking at about 470, and the segment is going to benefit from all this SST waiver, the new models coming to the picture, and then the kind of tax incentives. Now, when you're talking about the auto, those of you who are in the auto side here, please remember, we are complying to the 2050 zero emission. We are moving very fast into EV vehicles. And eventually, we would want to have the EV charging station all over Malaysia. So this is the way forward that we want to go. So I will not be surprised by 2040, the number of petrol, diesel cars, vehicles on road would actually dwindle to be less than 10%. We'll be moving all the way towards EV kind of situation. Already BMW has brought in their EV cars. They're going to be launched next year. So when I was asking them about how about the charging and all, they are working with all their outlets, okay, all over Malaysia, where they can have a charging station out there. So eventually Malaysia would also be moving in that direction. Just like petrol station, you'll be having a lot of charging stations. This can also happen in the petrol station itself. So this is the way forward. And also, if you look at the used car, yes, used car benefited from this pandemic. And I still think that the used car will continue to benefit going forward. One of the reasons from what my discussion with some of the used car players is that of their online platforms. So the online platform has created a lot of convenience for both the buyers and the sellers. So it is going to be a good trend. But in the auto industry, it is all going to be towards the EV related. And if you are in the OEM, eventually you also have to move towards the EV related kind of OEM. You cannot be relying on the traditional way going forward. So the business dynamics will have to shift. On the property side here, I foresee that there could be a little bit of pickup coming in going forward next year. And whatever said and done, if it asks me about the recovery will start in 2022 and 2023. And more of residential launches will be a bit slow. I'm talking about 20-30% kind of new launches sometime in the first half. And what I notice is that the appetite is still between 200,000 to 500,000 kind of levels here. And if you look at the residential overhang, it's kind of a bit high. You're talking about 31,000 plus units up there. In terms of value terms, it's more than 20B kind of levels. And also, and I think that the focus on residential is still going to be on 200 to 500. Bulk of the residential overhang is actually coming from the condominium side. So that is a bit, I would think that it's going to be a bit cautious out there. Now, on the industrial property, it's positive. Now, this segment is definitely going to improve going forward. Why is that so? With the pickup in the economy and with the increasing focus on industrial park, I foresee this segment to actually start benefiting going forward. Anything to do with office and shopping complexes, this is still going to remain an excess supply. One of the challenges in the property segment is all about the rising material costs and the kind of transfer pricing that you're going to see out there. Now, if you move to the following slide on the agriculture. Now, agriculture, we are moving into a new wave. And what we are focusing on is on the agriculture food security. We want to move a lot into the agro food. And as a result of this, we want to move into the upstream or into the high tech of agri methods. And when Tun M was the 7th PM, when I spoke to him about agriculture, we were talking about smart farming and something that he was also in line with the same view. And that was when I told him that we have a lot of abandoned buildings, okay, a lot of land out there. Why can't we convert these abandoned buildings and land to move into smart farming? Because I saw this in Japan and in Korea, and he was also into that. So if you are getting into this kind of agriculture, I think if you're talking about the old traditional way of using the charcoal and so on, that era will eventually fizzle off. We are moving more into smart farming. We are moving more into organic farming because what I notice is Malaysians are increasingly talking about lifestyle, quality lifestyle. So when you're talking about quality lifestyle, healthy lifestyle, they're moving towards more organic products. So this is where you should be actually looking at. And for those of you who have got a lot of any buildings that's left empty, you could start thinking of ways of how to convert your building into more of smart farming kind of things here. And the other part we are also looking at is livestock we are trying to do modern farming processes here. And we want to push a lot on the e-commerce platform for agriculture. Because like I said earlier, e-commerce for Malaysia at the moment, we are focusing a lot on the contribution is coming a lot from manufacturing and services, kurang daripada agriculture. So I think kita kena what we need to do is kita kena actually beef up the e-commerce platform for agriculture also, so that one, the usage of e-commerce becomes very good. Second thing, you cut off the middleman, so your pricing becomes more attractive and competitive here. And again, we are also talking about green financing out here in terms of agriculture. Now, if you move to the following slide, is on the palm oil. If you're looking at the palm oil, it's going to be very positive out here, upstream and downstream. This year, we are looking at a price around averaging 4,002. Next year, probably around 3,005 kind of level. Over the next 6 months, I think I will still remain very bullish on the palm oil because of this good demand coming from India and China. And if you look at the alternative edible oil, prices have gone up. Even soya prices have gone up because the feed consumption of the robust pork production factor here. And so that is also helping out this whole thing here. And on the longer term also, I feel that there is still a lot of upside on the palm oil segment driven by the yield factor here. So also, we have been talking about this biodiesel B20. I hope that moves in quite fast going forward next year. And if you move to the following slide, that's on the construction side here. Now, like I said just now, 75 billion gross development expenditure should actually give the kind of lift for the construction side. And what really, if you look at the projects awarded, this is the first time we are seeing projects awarded in 2020 and 2021 to be less than 100p. Okay, we have never seen projects awarded to be less than 100p historically. So you can just imagine how severe the pandemic has affected us besides the political issue. It's a combination of two things here. okay, out there. So I think what's happening going forward is that with the 75 billion GDE and with the same projects, all these projects that I have listed out there worth about 141 billion being rolled out, I hope the projects awarded will move back to 100B and cross that 100B in 2022. Only thing comment on the construction side is that there are no new projects announced. So hopefully going forward, when these projects starts to roll out, I hope to see going forward next year, more projects to be rolled out. Okay. And if we move to the following slide, that is coming to my last slide here. On the whole, if you look at the overall economic performance going forward next year, you can look at a average growth between 5.5% to 6% kind of level. Malaysia still being a trading economy, we expect the country to benefit from global trade. So the export segment will continue to play a very important role. And with the kind of another round of huge public spending coming into the picture, I hope to see the domestic side to recover fast. So the domestic side will then be supported. First, it has to come from the strong takeoff from the construction side. Then you will see the trickle-down effect to the consumer side, and that will then push up the domestic activity here. And the other part is that also with the 12 MP being announced, budget announced, we have the 530 billion stimulus package and our OPR at 1.75%. I hope all these could actually give the kind of basic support to get the business going. I recognize the fact that coming from EAC and coming from AmBank, sitting on both sides, I recognize the fact that for businesses to revive back after having shut down, it's a challenge. So there's always this concern, will there be another round of a lockdown? Which, as at this point, I think will not happen. And hopefully things starts to move, the smooth opening of the operations of the businesses without much disruption, with all these stimulus measures in picture, businesses should start to improve going forward next year. And also on the commodity side, yes, those exporters, those who are into the commodity play, we are looking at an oil price averaging for this year, next year, 72 to 75 kind of level. And CPO, we are looking at 4.2 and 3.5. Semiconductors and all the export resource-based kind of activities will remain very positive. Good thing is that FDIs are coming back to Malaysia. You're talking about 63 billion in terms of FDI commitments and 45 billion coming from the domestic side here. That is only first half of this year. And if this starts to translate into realized investment going forward next year, that should actually help in terms of economic growth going forward. Ringgit wise, I'm looking at ringgit this year between 415, 420 kind of level. But next year, ringgit should actually strengthen further. OPR this year, I'm looking at 175. There's no more change. But going forward next year, this trend should go on until first half next year. But going forward, second half next year, OPR could actually be increased by 25 basis points here. But having said all the positive side, while we are talking about the risk, there are still risks here. That what could actually bring down or affect whatever kind of growth trajectory that we are looking at and the positive business outlook. One is the external headwinds, the China slowdown. Because China is going through a serious correction at the moment. And you must remember, we have got a 13.5% exposure, direct exposure to China. And slowdown in China can actually impact Asia, and that includes Malaysia. So the China headwinds can have a knock-on effect on Malaysia. Then policy rollback. We are expecting the Fed to start rolling back the QE this month. And now with the kind of numbers that is coming out in US, I'm expecting the Fed to start raising interest rates second half next year. Okay. Initially, I was looking at fourth quarter next year, paling awal, latest would be first quarter 2023, but now I've brought forward to third quarter of next year itself. Canada would be raising rates. UK, Bank of England, I'm expecting them to raise rates end of this month. End of next month, but in December. And the last one to actually start talking, I'm talking about raising interest rates will be the European Central Bank among these four people. But all other countries in Asia, in Asia, and also ASEAN, I expect them to start raising rates. Then the other challenge that we have is this price pressure, the cost side. Okay, if this trend continues to take place due to the supply chain disruption, if the mismatch between supply and demand continues, now this is going to affect your bottom line. Okay, it's going to add pressure to your bottom line. So we are going to see transfer pricing taking place. So when transfer pricing takes place, your underlying inflation is going to go up. And if the wages does not move up, and if the job creation is not there, then demand is going to get affected. It's a vicious cycle that is going to be there. Then comes next year household debt, because Mora is over. Once the Mora is over, people have to start facing the real household debt. What's going to happen then? NPLs can pick up. Bankruptcies can go up. The good thing about bankruptcy now, we have raised the bankruptcy threshold from 30,000 to 100,000. Anything 100,000 and above, you fall into bankruptcy. But even if you don't fall into bankruptcy, you cannot pay, the business gets into sitos and sikris. So this is the issue here. So when you go into sitos and sikris, you cannot get financing from the banks. So what happens? You go into along financing. Along financing, then it's a corner case here. So this is the other part is of concern. Provisioning. Is the bank's provisioning adequate? Then the other concern is also on what happens if Malaysia grows slower than expected. It's not 5.5 to 6. Tengok 5% pula. Okay, 5 to 5.3 or below 5. So this is the other concern that we also have here. Now, then comes on the downgrading risk by rating agencies of S&P, Moody's, and Fitch. Okay, one of the key things is that we want to see how the government is going to bring down the fiscal deficit now. Okay, the fiscal deficit is really high. So what is the game plan for the government to bring back the fiscal deficit down to 3% kind of level over the next 3 years? Because it is not just driving the economic growth and bringing down the fiscal deficit. You must also bring down your expenditure to bring down the fiscal deficit. So we want to see that part here. Then what is your medium-term tax revenue strategy? Then there's another concern, because next year, when we talk about political risk, is still there. Election is not over. Now we are waiting for the Malacca state government, Malacca state election. From that, we'll be looking at Sarawak state election. Then what happens when there's a GE comes? If the GE comes, will that mean a clean government, a strong government, or hung parliament? We don't know. So along that line, just for popular reason, we come up with popular measures, introduce balik another round of blanket moratorium. Now this blanket moratorium, because of blanket moratorium, S&P has already rated our banking negative. Cuma Fitch and Moody's not yet rate negative yet. So these are the things here. Political risk is there. Labor market, if you look at labor market, yes, unemployment numbers are low, showing 4.6. But a lot of youth unemployment is 13.5%. A high underemployment pula kat sana. A lot of people working, but working for just 1 hour, 2 hours. So these are all underemployment situation. And the other two parts here is on what happens when there are new variants that comes out and the vaccines are not efficient enough. This is a global issue and geopolitical tension out there. So these are the key challenges that we have out there. So net on the whole, what I can tell you is that outlook is positive. There's a lot of positive signs coming into the picture, but along that positive, there are also downside risks out here. So with that, I will stop here. I'm open for any questions. Thank you.
Thank you, Dr. Anthony. We would now like to open the floor for Q&A. You may scan the Slido QR code on the screen to post your questions. So, Dr. Anthony, we have our first question. The first question is, with e-news that Malaysia National Recovery Council is proposing to open borders to international visitors by 1st January, how do you foresee this will help the e-Malaysia economy?
Okay, when we actually want to open, you see, the tourism and tourism related sector contribution to the economy is about 24 times multiplier. So it's a very, very strong multiplier. We are not just talking about people just flying in and flying out. You have to look at the whole network. And we realized the impact of this lockdown, how severely it affected this segment of the industry itself and the spillover. Now, with this opening up of the border, it's something that we have been pushing very hard, and the Prime Minister, the current Prime Minister, is very into it, and we are very happy that at least now we are in that direction with the vaccination in place on the top of that. All these things going forward next year, when we start opening up, you're going to see a strong contribution coming to all those businesses relating to tourism. For instance, your accommodation, your transportation, your logistics, your food, okay, and etc. The whole segment of tourism and tourism related will benefit. So when that segment benefits, you're going to see a spillover to the businesses, that means the manufacturing relating to this, supplying to this segment. So there's going to be a spillover effect out there. So you're talking about a 24 times multiplier. Adding to that, with the encouragement of e-wallet and e-commerce kind of setting, on the whole, you're going to see a pickup. But I must tell you that you cannot expect the levels to come back to 2019 level. No ways. 2022 would not mirror 2019 levels. To come back to the 2019 levels, we should be more conservative and take a more conservative view. Look at somewhere around 2024, 2025 kind. Because it's only when the dust settles, then people will have more confidence, then there will be the Visit Malaysia coming back, more traveling coming back here. So the tourism will definitely boost the e-Malaysia at the end of the day. It's a whole work. We are moving more into the e kind of system now to keep your operating costs also cheaper and your reach is better and wider.
All right, thank you, Doctor. We have another question. Will GST come back next year? Yes.
Okay, GST ini very political word. Okay, very, very politically sensitive. I actually like GST, but never mind, it has been removed, and now we have the SST. What I would think is that if we do not introduce a GST, we could be having a modified SST, something like a GST, or we may come out with a VAT, value added tax, or we may introduce a GST. But all these three words I've used, modified SST, VAT, GST, they are all actually one. Okay? The concept is all the same. I would not be surprised that we introduce that back, because from the discussions that I had with businesses out there, many are actually in favor of a GST than a SST itself. They find it easier. So logically, introducing a system like something like a GST, you come back, you bring it back, but don't put 6%, maybe 2%, 3%, widen your base out, would be very much more efficient in terms of revenue collection, economic efficiency, and so on. I won't be surprised that that comes back by next year, because we have been talking about it. It may not be a GST, but it can be a modified SST or a VAT kind of concept. But storyline, sama lah. Okay.
All right, thank you, Doctor. Next one, we have what is the market implication towards company and investors on cukai makmur?
Oh, okay. Cukai makmur, positive, negative. Okay. Negative for stock market. Sebab cukai makmur is as a result of cukai makmur, around 130 listed companies, about 40% market cap gone. We're talking about 8 to 12% of your PBT affected. So that is on the equity side. So as a result of that, yes, we have been seeing a lot of selling pressure. And anyway, the foreign selling is not just because of cukai makmur. We have been a net foreign seller this year, last year, and a few years back also. And but this just added to the whole thing. And then now we also have the sales tax on the institutional side. So that is also another negative here. So, but the only thing is that this cukai makmur is just a one-off. Now, from equity, negative. If I look at it from the economic side, we need money. So the government needs money. So where do you get the money from? No choice. You introduce this cukai makmur and 33%, and hopefully the money that comes in, we channel it correctly, spend it on all the right productive investments and strategies. And what I really hope is that next year's budget, when we come to budget 2023, we remove this cukai makmur, and I just hope that we can streamline our corporate tax to make it more competitive. No more 24, maybe we bring it down a bit. Because one of the real issue that I've been hearing all the time is that businesses are willing to go to Singapore and other places, although the cost of doing business is high, but it is very well compensated by the attractive tax. So we need to start really looking at our corporate tax going forward. So tak apa, cukai makmur ini just for 1 year ini, we take it as we need to help the country, because this is not Malaysia's problem alone. This is a global problem of a COVID, and everybody needs money. Every country in the world is scrambling for money. Okay, especially when you look at developing countries. Most of the developing countries, their punya fiscal policy dah limit up, so they cannot do much. So you have to find other ways and means to get money. And we cannot raise any tax in this budget pun. Nak raise apa tax? Most people got no job already. Businesses are dying out there. So this is the only way out. So we take it as a one-off, just that's about it, as a national duty. Okay, yes, negative to equities, but we take it to save the country. But more importantly, going forward, budget 2023 is what I would be looking at, that this makmur, cukai makmur is out, and hopefully we start reviewing our corporate tax to be more attractive.
All right. Thank you, Doctor. We have a few more questions, Doctor. The next one is any concern on the impact of inflation towards the economy?
Yes, you see, my concern is memang lah CPI we say 4%, 5% and all those things. But CPI is a basket of goods and services tied to wage. Bukan setakat Malaysia saja. The whole world. We practice the international standard. But now what is happening is that the material cost is going up. Everything is going up. Harga ayam pun dah naik. 1 kilo I dengar what, $12 plus 1 kilo already. Okay, semua dah naik dah. Bukan, it's not just harga pasir, harga batu, harga steel and that has gone up. It's not just building material cost has gone up. Everything has gone up. Okay, only petrol belum naik lagi because we are still subsidizing that. If you go by the pump price, I think it would have gone up also. So technically speaking, prices have moved up. That means the underlying inflation has gone up. Kalau say contoh underlying inflation last time is 10%, now maybe 15% ke 20%, whatever. You can just agak-agak see from the ayam price last time and now you can agak-agak use ayam as a guide lah. Ayam basicnya, jangan, we don't talk about organic ayam lah, we just talk about the normal ayam itself. So logically, underlying inflation has gone up and it is a concern. Why? Because at this point in time, everyone are still okay because we are riding on the moratorium. You don't need to pay. Many people have not got jobs yet, and those who have got job, yang ada job pun not the old salary. It's all new low. We are talking about new low. So there's a lot of challenges out there. So the living cost is going up, but gaji tak naik. And then banyak also tak dapat kerja. So this is the challenge. Businesses, not everybody have gone back to 100% full capacity. Okay? If you take out those yang not affected, like the glove players, semiconductor players, you remove all this, naturally they will be 100% very fast because they are on good demand out there. External demand is strong. But what about the others who are here, who have not even gone into full capacity yet? So we are talking about maybe average out businesses, the others, maybe they're only operating about 40-50% capacity. So you have a business 40-50% capacity operation, then you have underlying costs gone up, gaji tak naik, kerja tak ada. So logically it is a cause of concern going forward, especially next year when the mora is no more. Now you have to pay back the bank, the utang. Okay, you have to start paying back. Gaji tak ada. So all this subsidy and handouts and all the things that we have been giving may not be enough to keep these people going. So that's why I said one of my concern going forward next year is the non-performing loans, businesses going bust, bankrupts. Because people got no money to buy, you nak jual apa? So there must be a demand to create a supply. So you can open your shop, but nobody comes. You have to close your shop at the end of the day. So I think it is a real concern. It is a real concern out there. It's not just for Malaysia, but it's a global concern as at this point in time, that underlying inflation too. So you have to be very careful and prudent in the way you want to expand your business. And if every consumer are very prudent, then there is slow demand, slow supply. So it's a vicious cycle that we are going to go through unless there is a breakthrough in this whole thing.
Next question from Mr. Jeff Kam. With Dutch consider new partial lockdown, will Dr. foresee it may happen again in Malaysia?
Okay, as at this point, we hope no need to have lockdown because, like I said, everything is doing, we are doing well in terms of vaccination, 95% adult population, about 76% in total population. And we are talking about trying to look at vaccinating those below 12 years old. But now my only concern is 40% don't want to go for booster jab. This is the concern now. Okay, because Malaysia ini, we are always this Malaysia boleh attitude lah. Sudah ambil the vaccine dah kata okay, COVID will be terrified of me now. But that is not the way lah. So if 40%, 50% are still like that, let's imagine we have to take a booster jab. The entire population need to take a booster jab. But tengok first round, yes, we are the best in the world, hit everything perfect. Now booster jab, we are the worst. Then we have to go back to the old lifestyle. That's my fear. If everybody is responsible enough to go for the booster jab, follow through properly, and all this anti-vaccine, I really don't know about this anti-vaccine and all this. I'm not against it, and neither am I for it. I'll only be okay if it's something that is approved by the FDA itself. And unless you're medically bothered out that you can't take the vaccine, I think otherwise, if every Malaysian and everyone who stays here play their role in taking the vaccine, the booster jab, and so on, we do not have to go for another lockdown or partial lockdown. Otherwise, what will happen? Cases will pick up. When cases pick up, we have no choice. Then the government will have no choice. No? They'll have to go back to the old style. So that is the thing here. As at this point, tak perlu. But booster jab everybody takes, no need lah, I think.
All right. Thank you, Doctor. Next question, Doctor. What is your opinion on renewable energy sector, and is it within the positive outlook or vice versa?
Okay, renewable energy is definitely positive. Okay, it is definitely positive. That is the way forward. We are looking at solar and all kinds of alternative energy. And we are, because you must remember, we are focusing, want to quit the 2050 zero emission concept. So you cannot run away from this renewable energy. Sorry, I did not put it in my slide. Maybe I should have done that. Okay, that certainly it is a very positive energy sector, I would say.
The next one is pertaining to the recent budget announcement. Will it attract investors to Malaysia?
Huh. Investors, okay, if you look at Malaysia in terms of investor, kalau you cakap pasal equity at the moment tak ada lah because of cukai makmur. Okay, not just cukai makmur, we have been a net seller for a while here, but eventually they will come back. Let me start with equity. If we start with equity, going forward next year, if you look at equity play, US market is neutral because it's going to be rate high, and we expect the US economy to start slowing down. Okay, so they will reach their peak and start slowing down. Europe market positive, UK market positive dari segi equity. China neutral to negative because China go more downside risk than upside itself. Korea is positive. Japan is neutral. Taiwan is neutral to positive. Hong Kong is neutral. You look at ASEAN countries, all are at the moment neutral. Dari segi Malaysia, neutral, but we also risk downside to negative because we have the election play coming and all those things, that uncertainty for a while. So this is how it is on the equity side. Now, if you look at foreign investment side, yes, they still like Malaysia. Like I showed you all just now, there's about 60 over billion of investment that came in already. I'm seeing appetite of investment coming from Korea, from Japan, besides China. The US and Europe are also talking. So appetite is there in terms of Malaysia. Now, what is happening here in Malaysia, working with the government now, we do not want investments that are very labor intensive because it defeats the policy. So we want to have investments more of quality investments. That means more value add investments. So we are moving into higher value add. But you must remember, Malaysia is not the only country that's doing that policy. The whole of ASEAN is also looking at the same policy. So when you talk about investment, appetite is there, but competition is also there. Net to the whole answer, FDIs will still be coming into Malaysia. I would say that. But then again, we will be very selective in what kind of FDIs we want. We are moving a lot into higher value add FDIs, manufacturing, and also we are also trying to promote Malaysians to go out. Okay, outward looking FDIs, because you must remember, we want to tap into the RCEP. The RCEP and CTPPA, it is not only just about investments coming into Malaysia. Now we want Malaysians to go out and invest also. So there's a two-prong. You've got to look at these FDI numbers in a very different manner. Don't just look at last time high, 90s, very high, now very low. Yes, 90s high because labor intensive. Now we are going to high value add. Dulu tak ada RCEP CTPPA, sekarang dah ada. So what we want is also local Malaysians to leverage on RCEP and CTPPA and going. If you cannot compete, you complement. So these are the two ways we are encouraging businesses to go into. So net FDIs will still be positive.
All right, thank you, Doctor. The next question is from Mr. Law. Banks face many bad impact in recent years. For example, NPLs, Mora, and lowest ever international rate. Lowest ever interest rate. Can we foresee banking industry will have boost performance in the coming year?
Next year is also going to be a challenging year for Malaysia in the sense of how banks are going to manage the NPLs. We expect NPLs to pick up because once we remove the moratorium, that's when we'll know the true situation. Next year, again, we will also see how the businesses are performing because we will know how the bankruptcy situation is going to be. Like I said, now the bankruptcy ceiling is 100,000 and above. To lose 30,000. So can you imagine 30,000 went to 50,000, now it's 100,000. So we have raised the palang lah. So the bar has gone up. But then those do not fall into the 100,000, those who do not fall into the bankruptcy does not mean they are very clean also. So this is the other situation. They may fall into a negative list on the Citos and Secris. So I think next year is still going to be a bit of a challenging year. Banks in general will remain very prudent in terms of lending. They need to look at quality of the paper. So not just to the business, but also to individuals. So next year is still going to be a bit of a challenging year before we get into a more clearest picture in 2023. By the time the economy would have come out quite well, assuming no major hiccups, no another round of lockdowns and all these kind of things.
All right. So thank you, Doctor. We have come to our last question. Sorry, two last questions. We have a question from JT. There are talks that raw material prices is looking to stabilize towards second half of 2022 due to overstocking. So does this correlate with companies in Malaysia?
Yes. You see, what's happening now is that you see a lot of them. Why I'm saying, just like me, many of us are saying that inflation at the moment is transitory. Transitory is largely because of supply-demand issue, because of the lockdown. It's mainly because of the lockdown issue. It's caused a lot of disruption, and we know that inventories have dropped and whatever not. So now there's a lot of pickup taking place, and with the opening, stockpiling will take place. So I expect the whole imbalances to settle by first half next year. So when we get into the second half next year, by which time prices will start to normalize. When I say normalize, it will not be at these high levels, that eventually they will taper down and come back. So eventually that should reflect a better pricing, even in not just in Malaysia, but across the globe. But having said all that, we must always remember one thing. Prices are always very sticky, adjusting downwards. Bila dia dah naik, dia tak akan turun. This is the challenge. Okay, gaji is very flexible downwards. Bila dah potong, you'll never get back your old salary. So this is the wage price rigidity model, we call it lah. So I am not too sure to say that if say second half next year, even if there's an excess supply to all these building materials and so on and so forth, prices starts to drop, does not mean that it's going to be translated to the underlying price down here is going to come down. Okay, bila dah naik, I've never seen prices coming down. Okay, so far lah. So that part I'm not too sure about. If you're asking me underlying prices going to come down sebab material cost ini semua turun, I'm not too sure about it. Probably if the prices drop very significantly down, then you may have to adjust downwards a little bit. But otherwise, it's just going to be sticky like that. But if you ask me, second half next year, I expect prices all to start correcting downwards.
All right. Thank you, Doctor. For last question, EV, solar, 5G. Which one do you think government will look at it first?
Both. We are looking at 5G, solar, and EV. All three, one pro.
All right.
Okay, because we need all three. You need the 5G. Tapi masalah sekarang is like, I think the connectivity is very important. Having 5G in Kuala Lumpur is alone is no use. We need to have 5G all over Malaysia. Because at the moment, even 4G pun, certain parts of Malaysia is 4G, certain parts of Malaysia 2G, certain parts of Malaysia negative 4G. Sampai you kena naik atas pokok to get your G, 1G itu pun. So I think the connectivity is very important. So we realize that 5G is the way forward if we want to go into digitalization. Like I told you just now, digitalization is very important under the new economy. This is actually no new norm, tau. We are actually moving to the sixth wave of the business cycle, global business cycle. The sixth wave of the global business cycle is actually digital, AI and all. This is really written. In the chart is written like Feng Shui chart. This is a chart. Okay, you look at the 50-year business cycle chart from 1700. Okay, this is the fifth wave. The fifth wave, all the previous 4 business cycle ended with World War. All ended with war. We had World War I, World War II, Vietnam War, Iran-Iraq War. So now the fifth wave. Fifth wave, I was actually looking at a war. Initially, I thought about North Korea war. Then, kalau nak cakap Middle East war, Israel dengan whoever, itu dah jelak lah forever. So, if they are too peaceful, something wrong. So, if they are fighting, then it's normal. Okay. So, what other thing? Then suddenly came trade war. But trade war pun dah senyap sikit. Tengok biological war. That is the COVID. Okay. So this is the thing. So we are ending off the fifth wave of the business cycle, not as a world war or North Korea war ke, Iran-Iraq war ke, whatever, but it's a biological war lah. Let's quote this as a biological war. So now we are moving into the sixth wave already. And actually the sixth wave, the paling lewat it can start is 2030, but paling awal is 2020. Okay, but because of this biological war thing, it has come to 2020. So now we are already moved into the sixth wave. Sixth wave of the business cycle is all about digital AI and so on and so forth. That's what we are talking. So it's not a new norm. Actually, it is already there, written in the chart. So for us to go into digitalized world, we need the 5G. Now, today we are talking about COVID, but please remember that the real crisis out there is climate crisis. The climate crisis has been put, now nobody is talking about it now. The climate crisis is a serious crisis out there. And that is why, if you talk about sustainability, ESG, yes, it is important. And along that line, when you talk about sustainability, ESG, you need the solar. So we move away from coal. So this, if you ask me which is important, all three is number one. So this is the way forward, because the 7th business cycle is actually what, we already started looking at it. That is the space economy. It's already started. So now the business cycle, the 50-year business cycle is getting shorter. From 50, now it's dropped to 30. So the next cycle from the 6th to the 7th might be 20 or 15. So that means your own business cycle is no more 3 years business cycle. I would say 1 year. Your 3 can become 1. So that is how cycles are getting shorter. So to your question, ESG, sustainability is important. Resulting from sustainability, solar is there. And resulting from sustainability, climate change and all, 5G is there. And resulting from that, automation is there. So all 3 is 1. Thank you.
All right. Thank you, Dr. Anthony. There you
Most
have.
welcome.
We have come to the end of our session. Thank you, Dr. Anthony, for your remarkable views and sharing. I hope all of you in our audience have benefited from this webinar. Once again, I would like to thank our speaker and our clients for joining us today. Till then, stay safe, stay healthy, have a good weekend and a productive week ahead. Thank you.
Thank you very much, and advance Happy New Year and Merry Christmas. Bye.
Thank you, Doctor.